I think Bitcoin, if you ask me, will Bitcoin trade up or down based on the passage of clarity? That for me is a little bit harder to assess than, say, Ethereum or other tokens that have a more direct acts into legislative efforts that touch their revenue model. But I suspect Bitcoin would do well, nonetheless. And I think in general, like beyond clarity, people are focused on midterms. And if you have the chance to really kind of bring more bipartisan support outside of just the Clarity Act for the crypto to evolve much further, I think that would go much longer. You have to think about flows, and flows means you have to own things that other people can't readily access. And that's why I think Bitcoin was really interesting at the beginning. It was hard to buy Bitcoin. It was risky to buy Bitcoin. And because it was hard to unlock flows, you're benefiting by being an early participant ahead of flows.
Bitcoin just answered a $63 billion question in a single day. Jeff Park says calling Bitcoin's next move purely off the Clarity Act is difficult. Ethereum and other cryptocurrencies have business models tied directly to new legislation, making them easier to read. Bitcoin doesn't work that way. Still, Park expects Bitcoin to perform well, and that's a signal serious investors shouldn't ignore. The market didn't wait around. That $63 billion rebound pushed total crypto value up 2.8%, landing at $2.32 trillion. Bitcoin now trades at nearly $66,604, up 2% in a day. Coinbase stock spiked as much as 12%. When Wall Street moves this fast, it usually means big money is already positioning. Here's why Bitcoin stands apart from the rest of the market. It's treated as a commodity, so there's little debate over its classification. The Clarity Act isn't deciding whether Bitcoin can legally exist. It's drawing clear lines between the SEC and CFTC for the wider digital asset world. And that clarity is exactly what institutions have been waiting for. Park points to something even bigger unfolding behind the scenes. Crypto equity markets have grown far beyond the familiar names investors used to track. TradFi and crypto keep blurring together as the two worlds merge faster than most people realize. Exchanges now offer tokenized stocks, tokenized real estate, and tokenized U.S. treasuries, all running natively on blockchain rails. Stablecoins are moving even faster than that. Park believes the Clarity Act could give traditional finance firms the confidence to finally step into crypto on a scale. Before you go further, subscribe to it. Bitcoin Frontier Hub is brand new, just like a lot of you watching, and every single subscriber is helping us build toward our first 1,000.
I think there's a lot of focus on the Clarity Act for sure, and the next 2 weeks is pretty much the gap in which the fulfillment of its dreams have to be realized or not. And as a result, there's a lot of bids towards not just Bitcoin and alt tokens for the construct of that potential tail outcome, but in crypto equities as well, as I've seen it. So some of the term structures across the volatility surfaces of equities that have some acts to the passage of clarity has an upward kink over the next few weeks versus the rest of the year. So there's definitely focus on it. And I think Bitcoin, if you ask me, will Bitcoin trade up or down based on the passage of clarity? That for me is a little bit harder to assess than, say, Ethereum or other tokens that have a more direct acts into legislative efforts that touch their revenue model. But I suspect Bitcoin would do well, nonetheless. And I think in general, like beyond clarity, people are focused on midterms. And if you have the chance to really kind of bring more bipartisan support outside of just the Clarity Act for the crypto to evolve much further, I think that would go much longer. So we actually, I think, need to see more movement from the Democrat side in the dialogues that we're seeing right now. If you look at the news flows, most of the stories that are coming out or being leaked is strictly from the Republican side.
Yeah.
Well, I think the universe of crypto equities has expanded much more beyond what the limited scope of what historically we would have called crypto players, because the reality is the TradFi business and the crypto business is merging. So when you hear traditional firms like Morgan Stanley or even Robinhood that are not what you would have called typically crypto names come into the lanes of what crypto represents, I think the universe is far bigger than people expect. In other words, crypto sometimes can pigeonhole itself into this sandbox of being this plaything on DeFi and on-chain finance. But if you really reinterpret the other side of that coin, crypto is just a frontier of finance in many ways, about unlocking new financial primitives that people can find capital efficiency or solving asset liability mismatches or bringing different kinds of retail distribution. All of those constructs are just becoming more viable in the age of hyper-financialization. If you look at prediction markets as a category, for example, most people don't really think about that as a crypto company in the sense that there isn't a natural like asset or role that crypto necessarily plays into what consumers want. Now, if you look under the hood, there could be, or some companies, but the reality is most people don't care. Crypto just exists kind of in the backdrop. And really what you're finding out is people are excited about new ways to pursue capital efficiency and investing. And so I think crypto as a category is just increasing. And that's, of course, just on the exchange side of the business. But if you look at the stablecoin universe, space is augmenting even faster. And the Clarity Act, of course, is a big component of the relevancy for some of the traditional players to find their way to bootstrap in.
Early Bitcoin buyers didn't get rich by luck. They got rich by taking the risk almost nobody else dared to touch. Jeff Park explains why Bitcoin was such an attractive investment in its early days. Back then, Bitcoin was hard to buy and widely seen as risky, so only a small circle of investors got involved. As access expanded and capital began to flow in, those early holders benefited the most. Early Bitcoin investors built massive wealth by accepting extreme risk in an unproven digital asset. The technical barriers and security dangers of the early ecosystem demanded intense commitment and high conviction. Only those willing to hold through the uncertainty walked away with outsized returns. Park believes most successful trading comes down to one thing: getting ahead of capital flows before the rest of the market catches on. Some of the best opportunities sit outside the traditional 60-40 portfolio of stocks and bonds, in places most investors overlook. According to Park, this is exactly why prediction markets still lean on traditional financial risk models, even though people often associate them with crypto. Investors who understand both crypto innovation and traditional finance hold a real edge as the two worlds keep merging. Let's get back to the video.
Well, I should mention that none of the things I'm saying here is investment advice. These are all views of my own. And the reality is, like, prediction markets are information markets. And so everyone should pay attention to some level to figure out what the mosaic theory of price action could look like by paying attention to all these differentials. And the thing that is interesting about prediction market as a primitive when it comes to some of these event contracts are they're binaries. And so binary options are essentially digital options where the payoff is 1 or 0 based on an event happening or not happening. And binary options have actually existed in traditional finance for a long time. In fact, I started my career at Morgan Stanley as an exotic options trader where the entire business was about pricing binary risks, meaning discontinuous risk that experiences these kind of jumps and gaps where basically a log normal distribution wouldn't be able to account for a hedging portfolio. And that is structured by building very tight levered call spreads. If you imagine a call spread where you have one strike you're long and one strike you're short, and you have like a linear path of achieving in the moneyness, you tighten that as much as possible, and eventually you can almost close your eyes and graphically imagine it. You tighten it very narrow, it becomes a binary option. And so what I mean by that is prediction markets are ultimately still priced out of traditional risk. So if you can play in both sides of the world, have an appreciation for these crypto primitives, but understand that a lot of these financial underpinnings have been discovered in TradFi for a long time and practiced in its own ways, there's opportunities, I think, in the merger that is possible today. You have to think about flows. And flows means you have to own things that other people can't readily access. And that's why I think Bitcoin was really interesting at the beginning. It was hard to buy Bitcoin. It was risky to buy Bitcoin. And because it was hard to unlock flows, you're benefiting by being an early participant ahead of flows. Most of trading, if you ask anybody, comes down to being ahead of flows. And so when you trade assets that are outside the system as we know it in 60-40, that's kind of where the greatest opportunities could be. And so the radical portfolio theory is really enthusing that mission towards alternative asset classes that can hinge upon that. And there's many ways you can think about what alternative assets can look like outside of stocks and bonds. And one of the categories that I love is collectibles. And so Pokemon cards are a cultural mainstay. It has performed exceptionally well. I believe it's up 5,000% since 2004, which is 10 times the S&P.
Don't know why I ever bought crypto. I could just Blastoise.
If you bought vintage PSA 10, Charizards, and Blastoises, you would have done well. And of course, you got to make sure there's numbers that are being truthful about indexing versus single cars, and that goes with any market. But in general, these things have been interesting because it's preceded flows.
Bitcoin continues to create new opportunities for investors who stay informed and think ahead of the crowd. As more money, innovation, and adoption move toward Bitcoin, understanding where the next wave of demand could come from becomes even more important. The biggest gains often belong to those who recognize change before everyone else. Watching Bitcoin closely and following long-term trends instead of short-term noise could make a meaningful difference in the years ahead. Do you think Bitcoin is still an early opportunity, or has the biggest move already begun? If you enjoyed this Bitcoin update, make sure to like the video, subscribe to the channel, and turn on the notification bell so you never miss our latest Bitcoin analysis. Thanks for watching, and we'll see you in the next video.